Good morning and welcome. Patriot Radio News Hour. Joe and Jason on a hump day Wednesday. I hope it finds you well out there. Our toll-free number, 800-951-0592. The website at allamericangold.com. And I'm just going to tell you right now, buy as much as you can. Well, it's still affordable. And relatively affordable probably is the better answer. We got a great show lined up for you. A lot of things to talk about. We got Jay Powell talking tomorrow. We have more incredibly bad news when it comes to inflation, when it comes to energy prices. An absolute disaster occurring this morning as oil inventory reports came out, stockpiles in Cushing, Oklahoma, which really, why is that important? Most people probably have never heard of Cushing, Oklahoma. It just so happens to be where the biggest storage facility is in the country, and what the NYMEX, if you will, the oil's futures market, that's where they base a lot of the price of crude oil on. We are now at lows. I think there's only one other time where it was a little bit low, and just a little bit lower than where they are today. And that was like 04. And I want to say that was all there. Maybe 04, I can't remember the exact year, but it was around that time, and that was all hurricane related. Remember, all the hurricanes came through, took out refiners, took out pipelines, and I want to say oil spiked to like 130 at that, and it was very brief, only lasted for a few weeks, and then it was right back down. This is a much different story this time around. Not only do they not have any oil in Cushing, Oklahoma, but, Jason, they don't have any oil in the Strategic Oil Reserve either.
Well, it's not like there's any policies in place to improve that situation. So, as far as I'm concerned, it's a purposeful situation, and yep. I guess $150 barrel oil is coming next year, maybe more.
And you know, right now, here's what they're saying. They're saying the new normal, this new normal, right? Okay, here we go again. Anytime you hear new normal, that's bad. The new normal for crude oil, $100. So we're not even at $100 yet. Now, we're at 93 again. So we're right back. The dollar has had a huge rally. I mean, a massive rally. The dollar's the highest it's been all year long. And yet crude oil is going higher. It's not supposed to work that way. But again, the dollar's running hot. We've got Jay Powell talking tomorrow. Neil Kashkari came out. Man, Jason, I'm getting a bad feeling. Because the other day, he said there's a 40% chance for substantially higher rates. Today, he reiterated the fact that rates need to be higher. Jamie Dimon yesterday, by the way, Dow was down 400 points yesterday, mostly because Jamie Dimon said, hey, guess what? We just started telling all the rich people, all the people that we care about, 7%. And he's talking about, the Fed's funds rate at 7%, not at 5.5%. I hope that's not true either, because Wall Street now is starting to buckle here at 10-year notes at 4.5. I don't know that they could even survive at 7. How many banks would go under at 7? Jason, it seems unthinkable that they could go this high, but then again, everybody's waiting for the Fed to save them. This is why Wall Street's at 33,000 now. And down again today. But they're talking about rate cuts next year. Don't think that's going to happen. And Wall Street's starting to come to grips with it. But Jason brought up something, Jason and I, we talk in the mornings. You brought up something that, hey, could the Fed relaunch quantitative easing even with interest rates this high? Because normally how it's supposed to, again, let's face it, there's no such thing as quantitative easing in the economic textbooks that say that's a good thing. It was idiotic, reckless policies that's caused all of this. All of this. Just so what? The Dow could have been 34,000 for a little while. We did all of that for that. Right. I'll tell you right now. You better hope and pray. You've got a really good financial advisor, and you better hope and pray you've done what is necessary to be diversified in this market. Because if you haven't, if you think the beating you took in 2022 was bad, it is going to be much worse this time around. And that's not a guess. That's what's coming. And Jason was talking about, because how it's supposed to work, allegedly, was first you bring rates to zero, and then you do quantitative easing. Because you don't print money with sky-high interest rates. And Jason's like, hey, it wasn't in the rule book to have quantitative easing to begin with. Why not just do it? Can we possibly be in this much trouble where we have high rates and quantitative easing? We'll be right back. (800-951-0592). Joe and Jason, Patriot Radio News Hour here on this Wednesday. A quick look in here. The Dow is down about 75 points right now. The S&P's down fractionally. The Nasdaq's up 10 points. The 10-year note 4, 5, 6. Crude oil, every time I look, it's just higher, up $3 right now, $93.38 on NYMEX crude, $96.40 on Brent unleaded gas futures, up another 5 cents. Gold and silver are down today. It's an absolute buy on gold and silver right now. But like I told you, if you didn't hear yesterday's show, you better go listen. You better go listen. If you aren't smart enough to be diversified, have a really good financial planner, have investments that are not correlated to Wall Street, you're going to have a very regrettable year in 2024. I mean, listen, last year they were down 20+%, and a lot of people were down a lot more than that. This year, listen, the market hasn't done anything. Back right where it hasn't done crap. And if you didn't own like 7 stocks, okay, maybe 8, you're probably down again. And I think next year's going to be much worse than that. That's why I've been talking for almost a year now. I've been telling you about Y Refi. If you qualify for Y Refi, it is a no-brainer. It's a no-brainer. If you've got $50,000 or more, you get a fixed rate of return of up to 10.25% fixed. You turn your income on. You can turn it off. You can compound. You can do whatever the heck you want. No fees? Yeah, no fees. If for whatever reason you need your money back, they don't attack your principal at all. You get all your principal. You get all back. Best part, it's not correlated to Wall Street. Think why refi cares about $93 oil? Nope. You think they care that every oil expert in the world, and I'm not talking about the idiots on TV, talking about the companies that actually do the drilling for the actual oil itself, are saying the new normal is going to be 100. Well, you know what that means. You don't have to be a rocket scientist to figure it out. The new normal is 100. That means, guess what? When things get creepy, things get weird, it's 125, 150. Remember those $200 bets on crude oil? Yeah, those things. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them. I mean, that's the easiest thing. 888-Y-REFI-24. 888-Y-REFI-24. And just tell them we sent you. That's all you need to do. And if it works for you, awesome. If it doesn't, okay. But you better get serious about what's getting ready to happen because, Jason, this is not a scenario most people thought was going to be coming now. And now we have some people in the Fed starting to say, Neil Kashkari is not a hawk. He's one of those dovey guys that's saying, this doesn't look good. The UAW is still on strike. Now they want to strike at the Spam plant in Minnesota today. Las Vegas, all the hospitality workers have agreed to go on strike if their demands aren't met. Jason, this is what happens when you allow inflation to get entrenched. This is what happens when everybody out there starts going, hey, I got to fill up my car. I got to pay my car insurance. I got to pay my car payment. Right? I got to make my mortgage payment. I got credit card debt. Right? And everything is skyrocketing. Your home insurance is skyrocketing. Your auto insurance is skyrocketing. Your health insurance is skyrocketing. And, when you sit there, you're talking about the UAW, Elon Musk. They're going to go bankrupt if they agree to these terms. Now, listen, I'm not a big union guy. I don't want people to get misconstrued here. They want to make about $80,000 a year working on the line at one of the major auto plants, right? I mean, you make more money driving for UPS, right? 80 grand a year. Here's the sad part. 30 years ago, 80 grand was a lot of money. Today, 80 grand, could you even afford to buy one of these new cars you're building on the line with 80 grand? I don't think you could. Not if you got other bills. You can't. Not if you got to make a mortgage payment. Not if you got to make multiple car payments and insurance. Jason, you can't do it.
Yeah, I'm sure someone could make $80,000 a year work, and it's just tight. It wouldn't be like you're really comfortable and that you're never thinking about money. What Joe's talking about 30 years ago, that was the kind of income that you didn't think about money very much. You were fine. You were thinking about where you were going to invest some of that money and make more money. $80,000 just gets the bills paid nowadays. I'm sure people that are earning less listening to this are like, well, geez, I earn less than that. Well, how good is your situation? How much do you think about money?
Tough.
Right?
Yeah.
Right, Joe?
Yeah, and it's something where, as we're talking about, could this be the scenario here? Could we see a situation as the amount of money in these reverse repos continues to decline, where the Fed could be forced into quantitative easing and a 10-year note that's north of 5%? Jason, that's when you talk about scenarios just being crippling. This is something now that has to be on the radar. And of course, all of that will do is make everything even worse, right? You talk about bad inflation would get even worse, but this may be the choice. We either do this Or I'm not talking about a couple hundred banks. We could see thousands of banks go under. Could we see Wall Street losing 20, 30, 40, 50%? Jason, all of these things are on the table now.
Well, then that's what the printing would be, is to try to save the stock market, save assets just for a little bit longer. In football terms, with high interest rates and printing money, you're trying to get somewhere, and you just need a little more time. So in my mind, Joe, that the printing would be to buy a little more time. It'd be like on 4th and 10, you punt. But at the end of the game, it's 4th and 10, the clock's running out, it's Hail Mary. Right? That's what it is. It would be a Hail Mary to try to get wherever that printing money will get you for whatever length of time. Because, yeah, Joe, they know what they're doing if they print the money with that kind of interest rates. They know what's happening, but they can't lower the interest rates and have the inflation kick in even harder. So, hey, we'll just keep the interest rates higher, try to keep inflation down a little bit, and we need to prop up some institutions, and so we need to give them money, which then, of course, creates more inflation, right, Joe?
Yeah, I'll say this. Thank God crude oil is up over $3 a barrel right now, because otherwise Wall Street would be down probably another 400 or 500 points right now instead of 75 points right now. But this is a situation now where the Fed is starting to really enter into that box that we've talked about for years. When Jay Powell was calling inflation transitory, we were telling you they're in a box. There's no good option.
Yep.
Right? Fighting inflation, you crush the banks, you crush Wall Street. You don't fight inflation, it gets entrenched, right? And look at where we are today. They're trying to have their cake and eat it too. Right? Well, look, we got real aggressive for, like 9 months. We fought real hard for 9 months, and now we're doing this quarter of every other meeting. And let's face it, they haven't even committed yet to raising the rate at the next meeting. Right? They just paused. Now, I think crude oil is going to fix that problem for them all by itself. But now, here's the problem. Everybody was like, well, it's going to be, maybe one more and then it's done. And a bunch of people said they're already done. And get ready for lower rates. Get ready for the Fed to save the day. Well, it doesn't look like that scenario is viable, Jason, because, again, they're in this box. What do they do? And now we're starting to see all of the cracks. Look at mortgage applications. It's incredible. Mortgage applications are at 30-year lows, and every week it seems like they're falling another 2% a week. Another 2% lower, another 2% lower, another 2% lower. And, of course, obviously, rates over the last 3 weeks keep moving higher, and they've done it again this week. Jason, it just stands to reason we're going back to a lot of our economy is going to look like it was in the 90s, and yet we've got 100+ million more people, way over that, because we got 3 million illegals coming in every year. This is a big problem. I don't know the outcomes here. Auto sales, right? We got the strike going on. Loans on autos are getting outrageously expensive, right? I mean, tomorrow could make things a little dicier for the markets too. Because I was watching some guys yesterday, I think it was. They're saying so. Tell me if I'm wrong. I think the revisions on GDP are tomorrow. I don't know what time those come out. Yeah.
I heard these guys were saying this revision could go. They're not saying it is going to do this, but they're saying it's very possible that this revision goes all the way to a negative number. Can you imagine if that happens tomorrow?
Yeah, I don't know. Here's what I'll tell you. Everybody is saying there are going to be big downward revisions to GDP. I don't know if it would make them get into the negatives, but we've seen there's been obvious problems with the data all year. Everything seems to be a mess, right? They've revisited jobs. They've redone everything. GDP is coming up. We'll see. Here's the realities, though. The struggle is happening with people working. And now it seems like that last little push off the edge is starting to happen with the workers at the lower end of the scale. They're starting to buckle with these. Yeah, I know. Hey, a lot of people, hey, I got a 4% mortgage. Well, that was great. But you know how people buy homes in this country? I want to buy as much as I can afford. So, yep, you got a 4% mortgage, but you bought as much home as you could afford. But now your health care premiums are up. What you got to pay in gas is up. Your electric bill is up. Your health insurance, your mortgage insurance, your car insurance, all of these things are up. The bill at the grocery store is up, Jason. And now all of a sudden, right?
Hence all the striking. The striking is like, I can't get the home unless I get more money. I need more money so I can make the payment. So get me my more money so I can go buy a house. That's where all the striking's coming from, Joe. It's like, hey, I can't. So I think people are starting to figure out that the rates aren't going lower. I better get it now.
Yeah, and again, I just we'll see what Jay Powell has to say tomorrow. I'm anticipating that Jay Powell is going to stick with his message from last week. And again, we are in this new scenario here where rates are going to be significantly higher than most people ever thought was going to be the case, and then not come down. We'll be back. (800) 951-0592. Joe and Jason here on this Wednesday. Really quickly, crude oil's now up $3.45, 93.75. We'll keep you posted as crude oil inventories in Cushing, Oklahoma, are down near the rock bottom, almost not quite the lowest levels of all time, but closing in on it. This whole thing has really entered into this danger zone. You know, crude oil should have been a lot higher last year, but they took all that oil out of the strategic oil reserve. There's no drilling plans. There's none of that stuff. We should be, by the way, we are at the highest production levels. We're at the top of production, yet rig counts keep falling. How's that possible? You got almost $94 oil, and they're not putting rigs out there. That tells you all you need to know about what's coming. We've got two fantastic specials right now. Rolls of U.S. Silver Eagles. We've had them on special all week. Silver's down 40 cents. They're down to $600 a roll. We're $40 a roll cheaper than the big internet guys. $40 a roll cheaper than the big internet guys at $600 a roll on Silver Eagles. You buy a case or more. Jason, you're talking about being below $30 an ounce. A case right now, $14,750 on Silver Eagles. I think it was last week we ran this huge special on Indians. And I told you, the wholesalers got upset and this and that and blah, blah, blah. Today, we've cornered the market on $5 Indians. I've got 200, you heard me right, 200 $5 Indians. It's all about price. 1 through 9 at $5.70. 10 or more at $5.65. So the second time in a week, a $5 Indian is less than $5. $5 Liberties right now are $575. But here's the thing that really is why you need to get involved here. Just an XF $5 Indian. So we have the circulated $5 Indians, and then got, VF, XF. An XF $5 Indian right now, $675. So you can buy a circuit for $100 less. And let me tell you right now, I'll be honest with you, no one can tell the difference. Right? Nobody except some guy with a microscope can tell you the difference between a circulated $5 Indian and an XF $5 Indian, but I've had a wholesaler working behind the scenes. So here's what's amazing. We deal with all the big wholesalers. We know them all. They all know us. Nobody has it. Except the one guy we've had out there cornering the market. So we've got 200 $5 Indians. I think last week we were like at $5.85 and $5.80. You know, gold's down about $40 from last week. That's why this is such a great opportunity here. And you know, you guys know the story. It's got the infused design, right? They carved into the coin. That was when the Spanish flu came. They only minted these coins for 10 years. Even though they were part of the States, so 1908 to 1933, but after 1916, they stopped minting them. They thought it carried the plague. And in the case of the $5 Indian, they only minted them 1 or 2 years after. That was it. That's all there was. A lot of them got melted down when they confiscated it before. There's always massive. Listen, the premiums last year, the difference in cost between a $5 Liberty and a $5 in the same amount of gold was over $100. In other words, an Indian cost you $100 more than a Liberty, and today you buy 1 through 9, it's $5 less. You buy 10 or more, it's $10 a coin less. We've got 200 of them, and this will kind of be it, because like I said, we kind of went on this little deal, kind of cornered the market. Everybody's going to realize the Indians are gone. My guess is we're going to see the price go back up, because you can't have XF $5 Indians at $110 more than a circular. Just Jason, we know that won't last.
Yeah, these are great coins to get. It's once again good for those who can't buy the full ounce of gold, because everyone's got their different levels of being able to buy gold or silver or how much they can get. So this is fractional. This is a 1/4 ounce essentially of gold, and so it fits more budgets. If you're somebody that has a larger budget, this is a great way to buy a whole lot of fractional gold. You know, maybe you've stacked a bunch of the 1 ounce, $20 libs or St. Gaudens, and maybe you want something a little smaller or something to complement what you've got. This is a great way to scoop up a large amount. And Joe, we never know when the phone rings and someone's like, I just want to clear out the whole special. So a little bit of urgency maybe in order to get some of these while they're available, Joe.
Well, and again, I think that, Jason, this is a great deal regardless. We've been working on this for the better part of the last week and a half. When we saw the price come down last week, we jumped on it, and then we went to work behind the scenes and essentially have been out there buying every $5 Indian we could get our hands on. And this is one of those things, I don't care what gold does. Tomorrow, next week, we can have gold be exactly where it is today, and these Indians are going to be $50, $70 more just because of the fact that all of a sudden, right, hey, people pay attention. When hundreds of $5 Indians go off the board, it wakes people up, and then people start looking. Well, where are they? Well, let me get some. Then they start calling the wholesalers, and every wholesaler out there is going to say, we don't have any. Why? Well, because Patriot bought them all. 800-951-0592. And Jason, when we get back from the break here, we're going to revisit Jamie Dimon's comments and correlate that to what Jay Powell is most likely going to say tomorrow, and a reason why Uber Dove Neil Kashkari is now saying rates probably need to go higher, and he said 40% chance. Let's go 50. Because crude oil is up like $3.50 today. 50% chance that rates have to be substantially higher. 800-951-0592. $5 Indians, 1 through 9. 570. 10 or more, 565. Jason and I, we're going to be right back. $800-951-0592. These $5. This is the deal of the century when you talk about Indians under liberties. $5 Indians, $5.75. 10 or more, $5.65 at 800-951-0592. Just during the break, losses are now picking up here. It looks like it's going to be another rough day here on Wall Street. The 10-year note surging again now, 458. And this is the highest that we've seen it so far in this cycle. Get ready. It's going to go even higher. Jamie Dimon. We really need to look at what he's talking about, because if anybody knows, I don't like Jamie Dimon. I don't like his bank. I don't like what they've done to America. But he knows what's going on. And he's saying that the world faces a worst case scenario. This is what he said yesterday. And he said stagflation and an unprepared central bank. Boy, unprepared is probably a kind word, don't you think? A kind word. Assessing the risk of a hard or soft landing. He says, well, no one knows the range of outcomes. It's going to be affected by everything. Ukraine, oil, gas, war, Europe, Asia, China, Japan, right? The list for Jamie, it was seemingly endless. By the way, the Japanese yen, 149.50. Get ready. I think, this is a direct quote, I think we were feeling pretty good of all the monetary and fiscal stimulus. But it may have been little more than a sugar high. And that's really putting it nicely. It was fake. Right? How did we get the Dow to 34,000? Well, we printed our ass off, didn't we? We know what happened. And now we got to pay for it all, and that's the problem. We have to deal with all the serious issues over time, and your deficits just can't continue forever. So rates are going to go up more. Whoops. But I hope and pray that there's a soft landing. Jason, now does that sound like a guy, when you sit there and say, I hope and pray, does that sound like a guy who thinks there's going to be a soft landing? Does that sound like a guy that thinks it's going to be okay?
No, in fact, every time Jamie Dimon speaks and you bring it on the air, it sure sounds like a guy that is trying to scare the small fish, and then so he can scoop up everything they got for cheap when things go crash.
Jamie Dimon. Here's more. First of all, interest rates went to zero. Going from 0 to 2% was really no increase at all. Really, according to Jamie Dimon. Going from 0 to 5% caught some people off guard. But no one would have taken 5% out of the realm of possibilities. Unfortunately, the world's not prepared for 7%. If I ask people in business, are you prepared for something like 7%? Worst case is 7% with stagflation. Uh-oh. That's kind of what Jason was just talking about. Are we going to have quantitative easing and rates still going higher? Jamie Dimon talking about 7% in stagflation. We're going to have lower volumes. That's not good. What is he talking about? Lower stock volumes? Lower purchasing volumes? Lower home volumes? Lower car volumes? Lower volumes in everything. We're going to have higher rates, and there's going to be stress in the system. We urge our clients to prepare for that kind of stress. So there you have it. You can take my word for it, right? Who am I, right? I'm a nobody from nowhere. You can listen to Jamie Dimon. You may not like him, and he's a lot of the reason why we're here right now. Now, granted, he said this in India, right? You know, you can't say that here. He wasn't on, I wish he would say it on CNBC, but neither here nor there. Let me read it to you again. We urge our clients to be prepared for this kind of stress. I urge my clients to be prepared for this kind of stress. You need to have, listen, you just need to have more holdings in gold and silver right now. Period. Period. Fact. Because what Jamie Dimon is telling everybody is, hey, 0 to 2%, that was nothing. 3 to 5%, yeah, okay, we talked about pain. We talked about it. But now the pain really starts. And unfortunately, I think it's already started. 800-951-0592. Jason, coming right back. Final segment. $800-951-0592. The Dow's down 165. The S&P's down 10. The Nasdaq's down 15. Gold's down 20. Silver's down 30. Crude oil's up $3.30. The bond market 4.59. So approaching 4.6. We are very quickly entering an era now where are we talking about the highest rates going back to the 80s? I mean, this is what we are talking about. Everybody better get ready. $5 Indians, I can't stress it enough. What a golden opportunity here. 1 through 9 at 570, 10 or more, 565. That's cheaper than $5 Liberties. We cornered the market here. I expect next week these prices will be $40, $50 higher without a gold move. 800-951-0592. I'm going to read you some of the comments from people that have weighed in on Jamie Dimon's comments. When rates go up sharply, there's stress in debt repayments. How are businesses going to live with these higher rates? They're not. They're not. At this level, we would expect we would have a deflationary asset unwind. It would burst a lot of asset bubbles. It's simply not sustainable, right? In other words, when these guys are commenting on it, like, the whole market will blow up. Are you kidding me? And I think that's exactly what's going to happen. It's going to be a major market meltdown that's going to usher in the digital currency. You think these Australian banks are going rogue on their own? No. This has been the plan. Look at our own banks. You know what? They haven't announced it yet, have they? That they're going to stop taking cash. Not yet. Or, hey, you only can do cash deposits and withdrawals at certain branches. They haven't announced that yet. What have they done, though? They're closing They can't close branches fast enough. We've got you're talking about in a year, thousands and thousands of less branches. Jason, this is the lead up to it.
Yeah, exactly. And I'm just sitting there thinking, this is where my head is if you want to add $100,000 to your holdings, just buy 100 ounces of gold. When I came on with Joe in 2018, it was about $1,200, give or take a little bit, for a $20 gold piece. Now we're at $2,200. So if you had 100 ounces of gold back when I first came on, you've added $100,000 of value to your holdings. This is what gold will do for you, and then we're heading into the next jump in gold where it's going to do this again, and we'll be selling these for $3,200. And it's not going to be very long, Joe, from now that we're going to be saying, hey, $20 gold piece is $3,200. So, and it's not that you're going to be gaining a whole lot. You're just going to be protecting what you have. Because I'll tell you right now, if gold goes to $3,200 for one of these gold pieces, Joe, what's the price of everything else going to be? Look at oil today, just $3, right?
It's incredible as we watch all of this kind of unfold. We had that whole summer of calm, didn't we? Oh, yeah, everyone was high-fiving themselves and patting themselves on the back. And I told you it was the calm before the next storm, and now that storm is here. 800-951-0592. Jason and I, we're coming right back with the Half Empty Cup.